it's hard to stay on schedule. It is hard to stay on schedule. So, even if we got to do some pre-recordeds and
Yeah,
just allow them in, when we get a moment, because look, it's
yeah, for
busy.
sure.
It's life is busy, work is busy nonstop. And thank y'all for tuning in, for watching it. If y'all watching it live, if y'all watching it on the replay, my name is Rel Purnell. Over there is J Hall Agent, and right now you're watching Network is my net worth. So thank y'all for tuning in. We're gonna talk about real estate today, the climate of the market in real estate. We got J Hall, which is the realtor, the guy that's going to give us all the ins and outs on the market. Right now we're seeing the market at would you say it's at an all-time high, or was last year more of an all-time high? Let's start it right there, man.
Let's get into it, man. But before I do it, I do want to. I would feel bad if I didn't do it, man. I want to send a rest in peace to the family of one of our previous guests, my guy Lenny Logic,
Yeah.
who
Yes.
passed here recently, man. Prayers to Lenny. He was a visionary. He was building something, and my prayers is with his family. I'm sure you would say the same, bro. But I had to lead it off with that.
No, yo, appreciate you that dropping that in, man. Yeah, rest in peace, Lenny, man. Prayers up to all your family members, man. You blessed us with a great interview. I've been seeing the moves that he been making, man. He had some wild people on there that's making some major moves. I've seen I think Omar Gooden was on there, man.
Yeah,
Yeah,
that was a good episode. He was
man,
he
he
was
was,
building it, man. It was
bro, what?
yeah. I was taken aback, man. When I seen it, it threw me off, man. But I always respected his hustle when he supported us and we supported his vision, man. So I wanted to make sure before we got into the mix of our talk that I dropped it. But
Yeah, for
let's
sure.
get
Rest in
let's
peace,
get
Lenny.
into the market.
For
Um,
sure, man.
so I would say to answer your question that you posed last year. Last year, I'm gonna say in our lifetime, because we came from finance, so we saw it in that angle going back to before the market crash in '08, up until now. Last year was something that I had not come across in my lifetime. It changed, and if you talk to people that's been selling real estate 5 years, 1 year, 40 years, they would all say the same because it was just it was a free for all from a property perspective, and to provide a little bit of clarity on what it was, and then we can transition to the update. So it was the beginning of a seller's market, and we're technically still in a seller's market, even though it's gotten a little bit better. But in a seller's market, it's a basic supply and demand kind of situation, right? So we had a shortage of houses available, but because interest rates are great, people still want to buy houses because you want to buy it when the rate is great, so you can pay less money back to the bank in interest. So when you have a short supply but a ton of demand, prices go up. And the unintended consequence of what happens is price points and neighborhoods change, right? So you can live in a neighborhood that was historically, the average purchase price was $200,000. Let's say within the last 2 to 5 years in that neighborhood, once you get enough houses, right? So if the price point is 200 grand and 10 or 15 houses get sold in a year in that area at 300 grand, that changes the new price point in that area. Like you can't say just because it was $200,000 to buy a house there a couple of years ago that that's all you want to pay for it because the market has reset itself, right? So what ended up happening was it's a bidding war. So instead of if you think back to when you bought your house, bro, you looked at houses, you sat
Mhm.
down, you figured out what you wanted to do, you prayed on it, and you guys went after the one that was the one, right?
We went after a couple.
Now,
That was
well,
what,
right,
2012. The market was, I guess it was. I'm guessing it was kind of at the bottom, on its way back up.
yeah, I think it was in that case. It was more of you were still in that market where you could write an offer for less than what they asked for the house and maybe still get the home. Right, that was
Uh,
more of a buyer's market. Right, you got the leverage, ton of houses available, and not and less buyers than homes that are available. So in this case, because inventory was short, it shot the prices up. So if you bought a house in the last year, chances are, unless you bought something that was a fixer upper or needed some serious work, you paid more than what the house was listed for.
Yeah.
And technically, you can't even really. It would be difficult for you to say that you really overpaid because there were other comparable houses in the area that sold for that price point, right? So the transition into the update, the market has started to calm some, but I say emphasis on some because it's not back to where it is. Like if you still have the mentality that you're
Where
gonna come
do
in
you think it is? You mean where it was in what,
and
2019, beginning of
yeah,
2020?
I would say the market has not come back to where it was in 2019. To put it in a very simple way to understand, um, from the way my customers see it, my clients look at it like until we're at the point where you're in a really good position to buy a house for the price that they've asked for or less, or we're back in a buyer's market, a lot of buyers don't see it as back to normal, right? So what most buyers consider, because you gotta to add context, a lot of times when people are buying a home, they got a mother or aunt, a family member that bought a home before, right? And all these people tell these stories about how the person wanted, 200,000 for the house, but they offered them 150 and they had to
Yeah.
take it.
The
And
golden days.
so right, the golden days. So in their mind, they have now processed that as that's a normal market, right? Even though I know as a real estate professional, there's no such thing as a normal market. The market will change as things change financially. The market's going to change. Like right now, rates are starting to slightly creep back up. So as
Where
rates start,
where where are rates right now compared to last year?
so I like for people to understand, I like to use real situations. So at last year, I'd say last year and even the top of this year, I had some folks that were buying homes in the mid 2%, almost 3%, so 2.75, 2.99, right? Maybe depending upon credit, you might buy a house right now for three and a half.
Mm.
So it isn't, it's still better than what it was. Because for a lot of people, there have been so many refinances that have been done over the years because there's a lot of people that was walking around with 5 and 6% mortgages before this pandemic and the whole real estate bubble situation has happened. So the rates are starting to slowly creep back up. People ask, when is the market going to get back to normal? The emphasis is not necessarily about the market getting back to normal. Is we have to, as buyers, speaking to the buyer side before we talk about sellers, as a buyer, you have to have a more savvier decision, right? So when you talk to some of these people back in the day that bought these houses for less than what the house was being sold for, they see it as they beat the system, right? When you have a personal conversation with them, they'll talk about how they had the house for 5 years and been paying every month, and they don't feel like the balance is moving. Why? Because the
The
rate was
rate.
high.
Yeah.
So what I try to steer my clients towards is that the goal is not just to buy a house at the cheap price. You want to get the house at the most fair price possible with the best interest rate, because you can have your
Right.
house that you thought you got a deal on with a high interest rate and be paying, and 5 years pass and that balance ain't really moved in a significant way.
Yeah.
All of a sudden, it don't feel like a deal no more.
That's
So
true.
it's about being savvy in your decision making as a buyer. Great rate, fair price, is where it should be. Now, in my opinion, from what I believe I foresee happening in the market, is that I think slowly but surely rates are going to gradually rise.
Yeah. You said it went
So
up almost 0.5% in about a year, right?
yeah, I don't want to say everyone's credit situation is different. So you could still maybe get less than a 3.5 right now. I don't want to say everyone is guaranteed to get that, but it was, let's just say it was much more guaranteed that you'd get a super low rate last year or coming into the top even up into the summer of this year. Now, rates are starting to incline a little bit. They're starting to slowly but surely inch up. So, as a buyer, you have to factor in a lot of times people will make the decision they want to buy a house 6 months to a year before they actually want to buy a house. But you have to, you got to be strategic, and you got to buy when, in my opinion, when the market dictates it. So if rates are good now and your thought is you wanted to move in 6 months, you got to consider the idea of moving now, because in 6 months, if rates have gone up, you shot yourself in the foot. I mean, you can still buy,
Mm-hmm.
but you got to learn how to leverage and understand. And what I try to gear my clients towards is the market doesn't wait for anyone. The market sets itself. So the market doesn't go off of what the client or consumers believe it should be. If the rates are going to start to move, it's going to start to move. So you have to adjust yourself. Prime example, a lot of the reason why things have gotten crazy is because you had people that were already buying houses because they needed places to live. And then you had other people who were savvy who said rates are lower than they've been in years. I really wasn't planning to buy a house, but now I'm buying because I can't guarantee that when I quote unquote am ready to buy a house, that the rates is going to sit there and wait for me.
Yeah. And
So
when we got a couple $100,000, for a mortgage, that a 1% or 0.5% drop, man, that's a substantial amount of money.
oh, for sure, especially if you're going to make the decision or make the move anyway. And as Zillow and some of these other services have talked about, the cost of renting has gone up exponentially.
Yeah. So
So
let's talk about that, man. Is that
okay.
always when the market is high, on the buyer side, that the rates go up for rent? Is that typically the correlation of what you're
Well,
seeing as in your
I
industry?
would say in certain cases, yes. Number one, you're going to always be a jeopardy, in my opinion, for rates to go up, because from a landlord perspective, um, it's it's a business strategy for them. So for landlords, a lot of times when landlords change price points, they don't care about what's going on in the market. They're saying, I'm talking to my other landlord buddy who got a place around the corner from here. He's getting this. I'm charging my tenant this. When it comes time for the lease to renew, I want more. So I don't think necessarily that landlords factor that. Now, don't get me wrong, there are certain landlords that go through the process of hiring an agent and looking at the market and pricing it properly. For that population, yes, they may be watching the habits of the market and strategizing. But as we know, a lot of these folks out here, from a landlord perspective, are not licensed, and it's private landlords. Or you have apartment complexes, and people aren't stupid. So, in my opinion, for example, like, okay, COVID happens, right? So, through COVID happening, there are certain people that lost income from COVID. There were periods that, like now, there's a lot of assistance programs that are available. But initially, when COVID happened, there weren't really rental assistance programs. You needed to pay your bills whether you was going to work or not. So part of the market correction is you have a portion of people that lost their place because they couldn't afford it. And then you also had a portion of people who saw the eviction moratorium as a reason to not pay. Right. Like, so I don't, the government says I don't have to pay my rent. I got the money. I'm not going to pay anyway. Right. So they don't pay. And then what happens? The landlord has to make themselves whole. So they're not dumb. Landlords understand that as soon as it became available for people to potentially be evicted again, you're going to need somewhere to live.
Mm-hmm.
And from a landlord perspective, the way they're seeing is the person is high risk. So they're saying, okay, I'm going to tax you. So I'm going to charge you for more. And then it's a monkey see, monkey do approach. The major developers that own apartment complexes and condominium buildings where they're renting out units, they're not going to let the random Joe Schmo landlord or property management company beat them. So they watch and say, okay, well, now in this neighborhood, they can get 1,700 for a house. All right, well, we're gonna price these apartments at 1,500, right? So we're not gonna go all the way there because we know we can't offer you an entire house. And then you'll have some of these complexes that will look and say, our amenities are better. So we
Mm,
offering you a brand new unit, pool, clubhouse, everything else. We don't even care that they charging 1,700. We're gonna charge a couple thousand
yeah.
because we giving you amenities that aren't available. And that's why you have to, as a homeowner, as a renter, you have to become strategic. In my opinion, is getting to the point where even if you had no interest in being a homeowner, you have to consider the idea of home ownership because renting is going to become so expensive because you have to understand real estate is a way where a lot of folks choose to gain wealth. So when you come into my house and you want my house, the right way you're supposed to do it is price a neighborhood, see what rentals are going for, and price your place comparable as long as it looks comparable. Now, in my opinion, I don't think landlords doing that. Landlords looking at their margins and saying, "This is what I need to charge for me to profit the way I want to profit." And based off of what I'm looking around here, it's the wild, wild west, and everybody priced up. So it's almost like get down to lay down kind of mentality. So it's going to force you into the idea of buying and own a home. And what I try to tell some of the rental clients that reach out to me is whether you want the stress of owning a home, there's certain flexibility that you don't have. And let's go back to the COVID example. So there are certain situations where people got into a situation in COVID, and now it's like I'm gonna lose my apartment or my place to live because of my income, right? But as a homeowner, if anything hits the fan and I'm gonna lose my house, I'm not happy about it, but I can list my house and sell it. That's the flexibility I have. God forbid, even if I got $2,000 worth of equity in it, I can
Yeah.
sell it, not ruin my credit, take my little $2,000 worth of equity out of it, find me an apartment, and I can start fresh. As an apartment owner, I lose everything. So you're going to ruin my credit because you're going to evict me and put it on my credit and say I'm trash. So you're going to make it hard for me to be able to rent something else. Security deposit ain't no way that that's coming back because I didn't pay my rent. So there's no advantageous way for you to move forward. So that's why, in my opinion, before we transition into selling, as a renter, in the next 3 to 5 years, you're gonna really decide if you're about that rental life. The way it was when we was young and we was trying to move out our parents' house, and the thing was about getting an apartment and all of
Mm-hmm.
that. Soon the options are gonna be buy a house or I'm gonna stay in my mom's house because it's gonna
Interesting.
become so expensive. Because the other side of it is everyone has a neighborhood that they want to live in.
Oh yeah, for
When
sure.
you look at it, when you look at it or whatever, without getting into neighborhoods or any of that, but when you look at where you want to live and what the cost is there, for some people you're going to see that weirdly enough, you can afford to own a home in that area, but you can't afford to rent over there. And that sounds so stupid, but that's where we're getting to from a market perspective.
I've been looking at some zip codes, and I just looking at the rent. I'm like 1750, 1800, 1900 over here, 2000 over here. Wow. So to your point, I'm like, let me look at the home pricing. The home pricing was crazy too. I'm like, dang, for this zip code over here, wow, things
Well,
has
I mean,
changed.
and if we wanted to give a real scenario, I had someone reached out to me that needed assistance, and without getting into who they were, um, you got people that's paying 15, 16, $1,700 a month, and they living in a house that costs 40 grand.
Ooh.
It don't make sense. It doesn't make sense. And when people now, because we have the internet, people start to get on the internet and bored and they play around and they like, hey man, I just noticed that the guy that's renting me this place paid XYZ for it. And that's what I try to explain the fact that because I think sometimes non-home buyers or folks that rent have become um, mentally they've developed this sort of, if I'm renting a home, that's just as good as being a homeowner. And as someone has rented before, you're right. As long as you got a place to live, that's a blessing. But in terms of being savvy, the reason why when you want to go on vacations, you can't afford to pay for it. When you want to invest in certain things, you can't afford to do it because you're paying a few $100s a month extra to live in the area that you're living in, and you're not necessarily getting any amenities, and the prices aren't going down. I think sometimes for folks that are renting, they believe that, oh well, the real estate market is calming down. Landlords are not pricing their places based on, they could care less what houses are selling for. It's, you want to live here, and I'm going to take the risk of bringing you in as my tenant. Guess what I'm charging? You don't want to pay it? It's a whole line of people that need a place to live.
Hey, before we switch to the sellers, man, on the buying side, man, are you still seeing people having to write offers for well over the asking price with all contingencies and everything like that?
Not as much. I think buyers have to be willing to write well crafted offers, because let me dispel a myth, in my personal opinion. Some buyers feel like, and even some agents in the field may feel like, that purchase price is what gets you in a house. I've been in a situation. I've been in situations where I have had clients fighting against 20 other buyers to buy a home, and they lost, and we offered the most money. Sometimes it's not just money. Sometimes it's terms. So when I meet with clients and I agree to bring them on and take them on, I try to educate them to say, hey, here are some other creative things. Because the other thing is that it's not really cookie cutter. Every house situation for a seller is different. So like my process, 30 seconds on my process, I'll show a house to someone. They decide they want to write an offer on it. I'll look at, the terms of the house, what's going on with it. And then I'll come to them and say, hey, based off of my experience, here are some things that we can do to craft a competitive offer that has good terms and other things. And I've had far more success than just offering people more money, because sometimes some of these terms will, so like one of the big things that was happening, to give an example, one of the big things that was happening when the market was super crazy was people were coming up with these kind of appraisal contingencies. So to clarify, basically what people would do is they would write up a document and they'd say, all right, your house is worth 200,000 historically. I'm offering you 250 to buy. All right. Well, I'm willing to back it up with cash. So basically, if the house doesn't appraise for 250, I'll pay you the 50 out of pocket.
Yeah.
If it appraises for 50, I'll give you a certain amount of money and a financial incentive towards your closing costs. So you win either way. So if it over appraises, you don't have to, it's not your problem that I'm willing to overpay for it. That's my problem, right? So for a seller will look at an offer like that and then look at another offer where someone offered a whole bunch more money. The seller might take that lesser offer because the way they look at it is, it's no way I lose.
Yeah.
So that's it. It's a multitude of different ways you can do it. But as a buyer, you have to be willing to, number one, you got to interview an agent and work with someone that is creative enough to craft up terms that are going to be attractive to sellers in this market. And then you as the buyer have to be willing to go there. And I think you have to have honest and transparent conversations from a realtor perspective with clients, because you got to be able to set parameters up front. So when I meet with a client, I tell them, based off of your financial situation, this is from a term perspective, this is what we can do. I can't add other contingencies and do more than what you're able to do, but this is what's in our toolbox. So since we know what's available to us, as we find homes, we're going to craft it based off of what you're financially able to do to write an offer that makes it extremely attractive. Because there's no offer that you can write, outside of, in certain cases, cash, that guarantees you a home. What I try to do is I try to write an offer that's strong enough from a term perspective and creative enough that it makes it hard for you to turn my offer down.
So that's where your expertise as a realtor comes in. You know, your expertise, your knowledge. Are you when you creating these terms? Are you talking to the other realtor to kind of like pick their brain to see what the seller wants and then come back on the scene?
So, technically, legally, in most cases, unless it's allowed by the seller, a lot of times a listing agent can't tell you, what they're looking for, and in many cases, if they do tell you, it's a disadvantage to them because on a buyer side, it's a guessing game for you. You got to be able to use your expertise to say. So for me, when I take a client to see a house, I have to be able to say, hey, you know what? Um, Based off of other homes that maybe I've pursued in this area, price points in this area, and a multitude of factors, this is what I think our competition is. So the first thing I do when I'm talking to my clients is I come in and say, like, common thing now is a deadline, right? So they'll set a deadline on a home that's being sold and say offers need to be in by this date. They do what's called highest and best. So that whole thing you see on HDTV where people are negotiating, oh, I'll pay you this. In this market, we ain't doing none of that. One shot deal, you write one offer, you write the best offer you can, may the best man win. So what I try to do is educate my clients on this is what I think you're going up against. And then I craft an offer once we look at the comps of the area and what the house is worth, et cetera, to say, this is the offer that I believe, based off of what I think your competition is going to be, that's going to give you the best chance to win. At the end of the day, I work for the client. So client can very well say, I'm not willing to do that. That's fine. I'm going to support and write whatever offer they want. But from me, to your point, if you do this enough, if you study the market trends as an agent, and this is why buyers have to be very key at hiring agents, like hiring a real estate agent isn't a popularity contest, right? It's not about who's popular, who knows who. It's about, like it's number one, you need to have someone that is going to be able to relate to you within the transaction. But you also need to be working with somebody that is going to understand the market that you're in, that's going to come to you and say, I'm going to do whatever you want me to do. But if you want to win and you want to have a chance, this is what you're going up against. And in a lot of cases, when the market was really crazy, it normally would take 2 to 3 offers for someone to get a house. Now, part of that is because of the market, because sometimes you got people writing outrageous offers. And I've had plenty of conversations with clients where somebody wrote an offer that was so crazy that my client can't do it. You know what I mean? So I can't blame them for that.
What do you mean crazy? Like crazy high or?
Like, okay, I there was a property that I was involved with where someone had offered $75,000 above what it was worth. They supported it with cash. So basically, if it don't appraise, we'll put the 75,000 up. And they added in a bunch of other financial benefits in it that if all of those contingencies went through, they would have very well paid over $100,000 extra for that house. Right.
Wow.
In that situation, if it's past, that's why I have a conversation with my clients up front about what their capacity is. Because in certain situations, you can't get emotional and be upset. Because if this person is willing to go that far, it's sometimes a certain property may not be meant for you. You got to go to the limits of what works for you as a buyer. And I think sometimes I've had a lot of situations where it takes for someone to lose a house. And then the next conversation we have after they lose the house is, I see what you're saying. So what I try to do now before I decide to take the client on is I really try to drill home to them the fact of where they are, because the success rate of you getting the house you want faster will work really well if you follow the trends. If you come in and you're listening to a family member that bought a house in 1995, or you watch Property Brothers and Property Brothers told you about what they're doing with houses in Waco, Texas, and you trying to buy a house in Randallstown, Maryland, like, you're going to lose a certain amount of times, and then you'll realize, hey, I need to get in the game and understand that this is the market that I'm in, that I live in, and I got to pay attention to what works here.
For sure. All right, so buyer side, man. Let's get into the buyer side.
You mean seller side?
I mean, yeah, seller side.
Yeah.
You represent both, right?
Yeah, I represent both.
Do you are you mainly on the seller side, or are you mainly on the buyer side?
I've done some of both. I've worked with both. I do a lot with first time home buyers too, just because a lot of times I get a lot of referral business from people that I work with that say, hey, I have somebody who hasn't bought a home before, and I think that you would really teach them what's going on out here and take the time. But I work with folks on either side. There are some agents that will categorize themselves as, hey, I'm only a listing agent, or I'm only a buyer's agent. I do everything that's available in the wheelhouse of real estate that is ethical and legal, is how I frame it. So I do it all.
Utilizing the toolbox.
Yeah, listen, you got to have everything in the toolbox.
Gotcha.
To your question about the seller side, so for sellers, they're going to get a wake up call, and it's happening now. What you learn a lot is, and you know this being a homeowner yourself, you talk to your neighbors enough. Somebody in your neighborhood sells a house. People are aware, especially now with services like Zillow or whatever. If a house sells in that area, they know what it's worth. So what a lot of people have started to do is, the market had gotten so crazy that people just were prepared, had their house ready to sell, and waited, because they're like, man, it's so crazy. Like, I'm watching CNN saying it's going to get worse, it's going to get crazier than this, and I'll be able to make so much more money. But what they're starting to find in the market now is, you're still getting a great deal, but that crazy deal that your neighbor got up the street 6 months ago when he sold, when somebody told you that you should have sold, it ain't the same deal now. Because as the market starts to come down, like I told you, we're not back to a buyer's market at this point. We're still in the seller's market, but it's calmed down, and there's not as many outrage. I'm not seeing, let me be specific, I'm not seeing as many outrageous bidding situations as before. But from a seller perspective, that's where a lot of people are starting to kick themselves, because you talk to your neighbor who sold for $50,000 above list price 6 months ago, and you was gonna sell, but you were greedy.
Yeah.
And you thought you could wait 6 months or another year, and the market was gonna be super crazy, and you'd be able to get 20 or 30,000 more than he got. But now you're getting less than him. You're still getting more than what you asked for, but now you're getting less than him. And it leaves you with a salty taste in your mouth. And that's what I try to, when I talk to sellers, or like I'm preparing to sell, I just sold someone a house and I'm preparing to sell their house. In the process of me educating her, it's all about speed. The faster you get your home on the market, the faster you sell it, the better deal that you can get, because the market doesn't wait for you. The market doesn't say, hey, Rel, we're going to keep this crazy thing going until you are ready to sell your house for a gajillion dollars. It doesn't work like that. Number two, from a seller perspective, a lot of times sellers gauge and they turn themselves, one of my favorite things, one of the best and worst things that have happened to real estate is HDTV, right? So HDTV to me is great because, you can see the decor, you can see the shows, and a lot of times they will talk real legitimate real estate terms. And you'll be surprised the number of clients that I've worked with that have learned real estate situations through HDTV, where I'm not a fan of HGTV in certain situations, is that it changes your mentality and you start to believe as a seller that you're the real estate professional, right? So Somebody will do in your neighborhood, for example, somebody will do an open house and be selling their house. You and your wife and everybody that lives in the block will go there and look at the house, right? And they'll say, I feel like our house is nicer than that. And he got XYZ. And then they'll sell it. But what the seller isn't understanding is that that house that you feel like is not as nice as yours, it meets what the consumers in this market want. And a lot of times, because our homes, as a homeowner myself, our homes are our sanctuaries and we love them and we're so prideful of them.
Mhm.
Nobody's got a better house than our house. The market doesn't care about any of that. If you open up your phone and you look at houses that are for sale
Yeah.
and that are selling fast, they have a look. You
Mhm.
don't have to like the look, but they have a look. And buyers, because in many cases, in my opinion, I feel like HDTV guides the buying perspective. Buyers have a look that they want. So, for example, a big common thing has been gray and white painting in homes. So, when I have conversations with sellers, one of the main conversations we have, their house can be in great condition. I say, hey, you want to push towards top dollar, you got to paint your house. Well, I don't like that color. Okay, it's
Doesn't
not
matter.
necessarily about what you like. You can't be emotional in the process of selling, because the one thing about this market that has been positive for sellers is that if you follow the playbook and you look at the homes in your area that have sold and you make sure that your house that you're selling is up to that standard, you're going to win. It's very simple. It ain't stressful at all. Look at those houses. Look at your neighbor's house, whoever's house is sold. Look at the inside of it. Get a feel for it. Look at the things in it that are similar. Because a lot of times the floor plans in many of these neighborhoods are the same. You know, outside of, you might go in a particular house and somebody put a wall up or knock the wall down here or there, the floor plans are the same. So it's simple. Where it becomes frustrating for certain sellers is they will have a special room that they had their plants in hanging from the wall, and they think it's the most beautiful room in the world. But buyers don't want that. Buyers may not be into that room. So you have to be able to craft and prepare your property for what it needs to be. That's one side of it. The second side of it is you don't have to chase other people's homes, but you then have to be realistic and say, this house that I have is not equivalent to that house. So let me price it appropriately. It's one of the reasons why when I have a conversation with a seller, the first thing that I want you to do, because I'm transparent and I don't have a thing to hide, I'm gonna show you who the competition is.
Mhm.
So I'm gonna pull the competition up. Let's look at their kitchen. Let's look at their bedroom. Let's look at their bathroom. I'm not doing it to be ignorant. I'm doing it because I want you to understand this is what you fight. Because what I try to explain to them is when I'm on the buyer side, when my buyer is looking in that neighborhood, they're looking at all of those places.
Mhm. They want
They
the
want to
best.
see all of them and they want the best, right?
Mhm.
So you need to know what your competition is. And for most sellers, they'll see and they'll say, you know what, Jason, I see what you're saying. The weird thing is that I've known all these people my whole life. We got the same, likes and dislikes, but all of them painted their house the same color. It gotta be a reason. Like they didn't talk. It has to be a reason. Or all of them did their kitchen this way. Or all of them staged the house that way. Because in this case, you have to prepare your home as a seller for what is going to suit buyers. And then also from a price point perspective, if you want to get top of market, you have to produce a top of market product. You can't get top of market just because that's what you feel like you're supposed to get. And I think the other thing that has harmed some of our people, and this is why, and this coincides both sides. When I talk to buyers that I know are may sell their home, the first question I ask is that, is this a starter home or is it a forever home? And they're usually taken aback by the question, but
Yeah.
I ask because if it's a starter home,
Some people
it's
don't think
got to
about.
be a home. Would you say it again, bro?
I'm saying a lot of people, I'm sure, don't think about that when they going into buying that first home.
No, not at all. And for most people, they just want to get the house. But I try to pose the question because with a starter home that you may move out of, it's got to be something that's going to give you an opportunity to be able to resell it. And a lot of times, because of HDTV, and once again, this goes into the negative, people will buy homes and start being like, all right, I'm gonna bulldoze the backyard. I'm gonna put a koi pond outside with a Six Flags sliding board. Downstairs, I'm gonna set up a room because I like to hunt, and I'm gonna have moose heads or wolf heads hanging out the ceiling, and I'm gonna build a rainfall room. And they spend all of this money to do things in the home that do not add value. So then when they get ready to sell their home, they saying, man, I put this kitchen in and I bulldozed the backyard and I did this. Okay, you spent a whole bunch of money doing things that don't add value. So you can't get more money because you have these things. And in many cases, what I try to explain to sellers is that you may very well have hurt yourself in this property because you put things in this property that are only specific to your likes and dislikes. So with a starter home, you got to keep it as generic as possible.
Are you seeing homes sit on the market a little longer? Is that also dictating that things starting to cool down?
Yeah, I'm starting to see things sitting on the market longer. And this is purely my opinion. I believe that that's happening because there's a lack of realistic sellers. Because of all the data for the most part being available, most people that are selling that house have a feeling what people in the neighborhood have gotten. And they waited a long time where, like I was saying earlier, you can still get a fair offer and make out well. But that crazy, ridiculous offer your buddy up the street got whose house ain't as nice as yours, you're not getting that. So part of it is sitting because, when they hire the agent, they're telling the agent, price it at this. And I'm going to wait this amount of time. And if it doesn't sell, maybe I'll reduce it. And what I try to tell sellers, and I'll even go as far in many cases I'll walk away from a deal when someone wanted to hire me to sell their home, because what I don't do is lie, right? Like in selling a house can be a very simple prospect if you price it properly. If you come in, you know what your competition is doing, you price it accurately and effectively, you in a market like this, you should be able to sell it and sell it fast. Right? What you don't want is the home to get stale. And that's what sometimes, once again, you got to hire an agent that's going to be direct with you. A home will get stale because from a buyer perspective, right? You sit the house on the market. One thing I see that's common is people will start lowering the price. But they'll drop the price like $5,000 a week for 10 weeks. So from a buyer perspective, buyers will look at that and be like, oh, they must be desperate. Or the listing will become stale. And instead of, so you priced it, right? It hurts them for sure.
Hurts the seller, right? Because
it hurts them. It hurts them for sure. And to me, the to say it in a more logical way, and I'll ask you as an impartial person, you tell me what makes more sense. You pick up the phone and you say, hold on, I need you somehow. And I tell you, maybe you want to, I say, you can get $250 for it, right? And you say, I really want to start at $300 and I'll work my way down to $250. If I pose to you and I say, what do you want? Do you want to list it at $250 and we get it in contract quick so you can settle and get your money, right? Or do you want to do a $5,000 reduction for 10 weeks in a row? It's still $50,000.
Take the money and escape.
You could have already sold the home and moved. But I think that's, and don't get me wrong, I do see, and I don't want to keep banging on HDTV in this conversation, but I am seeing them trying to do a little bit more realistic shows where everything doesn't end in roses and flowers, because in certain cases, every deal doesn't end that way. And you have to be strategic in your decision making because That's how so many people get hurt. And a lot of times, I'm gonna be honest, it might take a seller agents before the house is sold. And that's just because, they were not willing to budge or change their thought process the first couple of times. The place didn't sell. Mind you, you still got to pay for it. So whether it sells or not, you got to pay the mortgage on it. And then after, when the desperation sets in, that's when the seller decides, you know what, man, I'm going to listen to this guy or this girl, and all right, I'm going to do what the market says, because the data is the data. Like, the market's going to tell you what it's going to do. So either you're going to listen to what the market is telling you, or you're going to do what you want to do. And I have not seen doing what you want to do be a strategy that works.
Yeah, you can't beat the market. I mean, I guess that's business 101, right? In any business.
Sir.
Business, cost, no matter how good you think your product is, the market dictates, cost and, volume and that as well. Before we get up out of here, man, what tips do you have for folks, on both sides, on the buyer side as well on the seller side, man? You drop tons of gems, you drop tons of knowledge. But if you can give any last tips, for either side, what would that be?
Okay. So I'll start with the seller side. The first tip I'll give is to take your emotions out of the transaction. It's business. And if you took your time, it's super hard to do.
When they that baby,
it's especially when they know, once it became public knowledge now, where you can just plug in and see exactly what the guy next door got. It changed the game now, because people, I don't care how much money they got, I don't care how great of a deal it was, they will always feel in the back of their heart, I cannot believe that guy got more for his house than I did.
Yeah.
So it's taking your emotion out of the process, interviewing the right professional. And that has nothing to do with, I'm not telling people to work with me. It's not even about that. You have to take the time to interview the right person. And popularity doesn't matter. Who has the strategy that is going to allow you to be the most successful? And for the seller side, the last two tips I have that are, understand that you are now providing a product for a client or a consumer to purchase. So it's not about your likes or dislikes anymore. The same way when you go in the supermarket, you want the grocery store to have the products you want so that you can make a purchase. And if they don't, you'll go to the next grocery store. It's the same thing. If you don't provide a product that is complementary of the price point you're charging in the neighborhood that you're in, you're going to have a hard time selling it. And the last thing I would say is just listen. If you went through the time to interview agents, to hire someone that you think is savvy, someone that you feel like has a track record in this business, then listen to them, because at the end of the day, their success is based off of what they're advising you on, right? Like, my business doesn't grow. I don't sell homes. I don't make income if my advice is unsuccessful, right? So so for me as an agent, speaking from a realtor perspective, there's no benefit I have by misleading you, like not anything. And especially if the agent is substantiating their claims via data. It's one thing if you want to say, hey, this person came in, had a nice suit on, nice dress on, talked circles around me, and didn't provide me anything to validate what they were saying. I hear you on that. But if the person is providing you data and saying, hey, this is what's going on around here. If we follow this play the right way, you can be successful. From seller perspective, you need to listen. From a buyer perspective, what I would say is come into the home buying process with a clear mind. This isn't buying a car. This isn't any other transaction that you've done. So while I respect family and friends, you got to do your own research and due diligence. and then talk to the professional that you hire, because your process is different. I've seen situations where two people are friends, they work at the same job, one person buys a house and this really big and super lavish home, and the next person goes to buy their house and they can buy a really nice house, but they can't buy that house. And it's like they can't deal with it emotionally. But what it comes down to is these people that you talk to about their process are not going to tell you the truth. You don't know that coworker that you sit next to, that you joking with every day about can't wait till we get a raise, they already make $30,000 more than you. But they laughing with you on a daily basis. Y'all drive the same cars, y'all wear the same clothes. So you assume that our financial situations are the same. But you don't know what their situation is. And when you go to them to ask them about how was things when you bought a home, they're not telling you the pain points of everything that happened in their transaction. So when you ask them for their opinion or what happened with them, you end up, not on purpose, but you end up coming into your transaction looking for what they got. And sometimes what they got gonna be worse than what you get. Sometimes it's better, but you have to clear your mind from that. You can't listen to people. Yes, you want to listen to elders and people that love you, but once again, the market changes, right? You're a car guy. If you went to buy an Aston Martin tomorrow, are you going to talk to your uncle who bought an Aston Martin in '86 and say, yo, what was the term? What was the rates then? Like, how much was the oil change to evaluate the decision? Nah,
Not
it
at
doesn't
all.
make sense. And a lot of times, what makes the buying process stressful is that you take in so much misinformation, because the other side of it is people will just blatantly lie to you about what happened in their transaction because they want to flex. So they're not telling you the real. So you end up coming in down on yourself and you're taking in so much negative feedback. And I say this because I get at the end of so many transactions and I'm laughing outside of settlement with the client and they like, man, this was so much easier than what you said. Like, knowing what I know now, had I knew that this wasn't what I thought it was, then I wouldn't. You still got people out here that I gotta save 40% because my grandmother put 40% down on her house in 1970. It is 2022. So just, I'll end it. My last main tip is really just same as I was saying for the seller side. Take your time and interview a professional that you trust. Listen to the data. It's one thing if they talking a bunch of rah-rah to you, and stop. I want my buyers to no longer focus on the aesthetic. Just because an agent pulls up in a Range Rover with a nice outfit on and they tell you about their production and give you a whole song and dance, if they're not substantiating what they're saying with data, you have to evaluate, is that the right person that's there? And then also, bigger than that, you need somebody on the buyer side that is going to work for you. Because every deal on the sales side, I'm selling the house. Either you want the house or you don't, right? It's very cut or dry. On the buyer side, there are certain things that'll come up in the transaction where, as an agent, you got to lace your boots up and go to work to get the deal to the table. And you need somebody that will get the deal to the table, whether it's $1 million house or $150,000 house. You need somebody that's going to go just as hard, because to me, in some cases, certain people had transactions fall through and it didn't work because they weren't being guided correctly or they didn't have anyone that was willing to work on their behalf. Those are my tips.
There you have it. There you have it. The bombs has been dropped. Hey, and have you seen last year people get discouraged? On the buyer side, they've been beaten down, they've been missing out on their offers and got out. And maybe now they're coming back in 2021. Are you seeing that? I'm just curious about that as well.
So let me ask you that. When you say Okay, so they stepped away and then came back and they're looking
Yeah.
now.
Are you seeing that since the market
Um,
starting to cool down just a bit?
yeah. So I've seen it two-sided. I've seen people. I've gotten calls from people this year or recently who said I wanted to call you last year, but I had conversations with certain people and I was scared to death. So now I'm coming. And then you, yeah, there have been occasions where you have people that kind of sat on the sideline because they felt like, the prediction that a lot of clients have thought is that everyone believes that 2008 is coming back, and that's what they're waiting for. So there's certain people that have been sitting back like
Foreclosures.
everything's going full close,
Yeah.
and me personally, in my professional opinion, I don't see it happening. But for the most
Even
part, when it's
so
go ahead.
stay right there. Stay right
Okay.
there with the foreclosures. Um, if if rates continue to climb, which is probably going to happen, the market's starting to cool off a bit. Those people who paid 50K over, 70K over to really get that house, when the market cool down and and you can, I guess, give your thesis on how long you think it may take for it to really cool down, 2 years, 3 years, or whatever case might be.
Mhm.
Um, if the appraisals start to drop, do you think the people are gonna, still stick with the house, or maybe walk away? I mean, what's your thoughts just on that?
They could. They could. People could walk away. I mean, it depends on, and this is where where hiring the right professional, in my opinion, comes in to be so key because all of that has got to be a form of discussion when you're going through the buying process. Like there's certain neighborhoods that even though the market has calmed down, where houses are still going for more money. Like it's so funny, because I developed such a personable relationship with a lot of my clients that when it come to real estate, they'll just call me to just, talk about it for 10 or 15 minutes. And I get calls every day from clients that's like, man, everything on the TV says that it, you know, the market's calmed down, but this house up the street from me, they paid 60 more than we paid, and my house bigger. So in my opinion, and this is just my personal opinion, I feel like there's certain areas, and I won't get that on here, but I think that there are certain areas that when you're looking, those areas the value may hold.
It's just going to stay there.
And you have to evaluate your transaction to understand, is this a place where I think my value can hold steady? Now,
That makes sense.
for some people that bought homes in areas that traditionally was in this toilet from a value perspective, and all of a sudden the value went through the sky, who knows what's going to happen with that? We don't know, and especially in this era where neighborhoods change. I mean, look at Southeast DC. Southeast DC a few years ago was quote unquote one of the worst neighborhoods to move in. People that were buying houses over there for a couple $100,000, they thought people were stupid for even paying that. And now you can't get into Southeast DC for less than $1 million.
Yeah, DC
So
crazy right now.
and to me, I feel like I see a lot of the trends of what's happened in DC happening here.
Yeah,
Eventually, some of these neighborhoods that, for lack of a better way to say it, people decide that they're gonna lock that door when they pull up in that neighborhood at the light because they think somebody's gonna jump in the car. In 5 years from now, that's gonna be some of the most premier places to want to live. And you're gonna think back and say, man, I was thinking about overpaying, when come to find out this neighborhood has blossomed 10 times over. So to answer your general question, yes, I think that there's certain people that are coming back now, and some of them are kicking themselves because rates have started to creep. And this magical bubble that they thought were going to happen, where the real estate market was going to go in the toilet and all these foreclosures were going to happen. And I want to say this before we end the call. This is just my personal opinion. This isn't 2008. My background, I was on more so on the lending and finance side in '08. In '08, no one was prepared for foreclosures to happen. Banks didn't have programs. And to clear something up, I know a lot of times people feel like financial institutions want their house. In actuality, they don't want the house because the house is a depreciating asset. And if they can't sell it and get value back for it, it's a loss of money. They actually want the interest in the payment, right? So now there's 50 gajillion of these foreclosure plans that are out there that are available to help you to keep you into your place, forbearances and whatever, right? On top of that, the market is up. The thing about '08, the market wasn't up. Imagine right now if you lost your job and you had to sell your house, and I came to you and said, "Well, you lost your job and you're going to lose your house, but you can sell it and walk away with 50 grand." You'd be like, "Wait, what? So you mean to tell me I lost everything and I can,
Pocket.
restart my life now?"
Right.
You know what I mean? So it's, and we'll do another one of these, bro, because there's some other things that I know we wanted to touch on. But, once things calm down for us after the holidays and season 2 starts, we'll do more of these real estate and kind of business updates. And I want to get some other real estate professionals who I respect to come on. But I also want to get some people from the crypto sector, the financial sector,
For sure.
to come on as well and kind of, so to speak, and educate people, because it's good to hire a professional, but the more that you can learn, the easier it is for you to know if you're dealing with a professional that's BSing you or that's being real.
1000%. All right, man. There you have it. We've been rocking for an hour. Taking these gems, y'all. Taking these gems. He's a professional. We always say what's the slang now? No cap.
Yeah.
We ain't capping at all. He ain't capping at all. And he
Nope.
just drop tons of gems, tons of knowledge. Man, the real estate market, it ain't for the faint of heart, for sure. On both sides. On both sides,
Nah,
you can lose.
it isn't. But it's much easier if you do it the right way, man. It'll actually turn out to be fun if you do it the right way. So it ain't that bad.
Yeah. All right, y'all. There y'all have it, man. It's Rel Purnell. It's J Hard Agent. Any last remarks, man? And you want to close this thing out? Or you want me to close it out?
Nah, I'll close it out, man. Thank you guys for tuning back in. No last remarks from me. Thank you for supporting the podcast. Like my partner talked about in the beginning, we've been super swamped with business. This is crunch time for us at year end and closing the year out strong. But we're going to be coming back to you, starting the first quarter of this coming year with the show, more guests, giving more game. We appreciate you guys sticking with us. And we're going to consistently look for ways to provide you guys value and education from a direct perspective. And if you're looking for somebody that's not going to fluff it up, we're not looking to sell classes or courses or any of that. We're going to tell you what you need to know and how to find the information. And it's going to be up to you to do the work. So we appreciate you guys for coming back. Peace and blessings to you guys on behalf of my guy, Rel. We love you. Support. Y'all be good. See y'all soon. Happy holidays.
We out.